Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is a cannabis business podcast. BDS Analytics just released a 2018 California cannabis recap. California is the leading state in the nation by far for cannabis companies, eclipsing Colorado by 60% with $2.5 billion in sales during 2018 alone. Last year, Colorado spent $120 million on cannabis compared to $115 million in California. Increased consumer demand explains part of the doubling of sales, but so does the expansion of retail opportunities. Gaining a proper 2018 license in California involved intense planning and paperwork. Many dispensaries that were legal in 2017 didn't get everything done prior to the new year. But during the course of 2018, regulators granted licensing to increasingly more pre-existing dispensaries as well as new ones. And by December, the state had bestowed its official okay upon 484 dispensary locations, as well as 157 delivery operators. The ever-increasing volume of outlets will likely contribute towards the increased sales for at least another few years. For now, though, let's scrutinize last month of Canada's big year. The products California consumers bought the most ran the gamut from eighths of Kush to distillates filled with disposable vape pens, pills to gummies, teas, and salves. Consumers in other states bought the same sorts of products, but California stood out. Concentrates with 37% of market share, bested flower share of 33%. Clearly, Californians appreciate concentrate, the majority of which are sold as vape pens. But the category's recent triumph over flower doesn't mean consumers are buying less flower. In fact, volume of sales have, over the past month, have experienced a 13% boost over November. So what happened? Well, prices for flower keep nudging down. December's average price for a gram of flour fell 9% to $8.29 compared to November. Concentrate prices have dipped 1% to $39.82. While flour and concentrates battle for revenue, edibles are increasing with 14% of market share. Revenue from edibles experienced the most growth between November and December, up 7% to $42 million. It's been a stable, sturdy category across the year, but one that's supposed to be a parade with new product launches. So as in all other new states, candy is the leader among ingestibles with 39% of the market, but it's not just any candy that carries the day for the category. Gummies represent 81% of the California marketplace, rising from 72%. Meanwhile, tinctures grabbed 24% of the ingestible market during that same month, and chocolates came in third with 14%. It's interesting because chocolate is generally the number one edible product that I've seen in Washington as well as Oregon. And that's probably because gummies are not legal. I would probably guess that the same thing is going to happen with California. They're going to claim that the gummies are targeting children and that it's too hard to differentiate between real candy. And so you can't have certain shapes or certain colors. And it's going to get crazy. But meanwhile, it's okay to have bubblegum flavored vodka or Lucky Charms IPA or champagne Jelly Bellies. I mean, there's all of these things. You can go to Target and see liquor right next to kids' toys. But for whatever reason, a 21 and over store has more scrutiny. So we're just going to have to deal with that in the meantime. But I don't think in the long term, gummies are going to be California's number one edible. California's cannabis market began the year strong as the state's regulatory structure firmed up in a staggering fashion across 2018. The industry expanded rapidly and with increasingly more muscle. During 2018, the market endured and finally thrived despite growing pains. While the industry remains adolescent in California, it's maturing rapidly. At this rate, California during 2019 will furtherly develop as an international powerhouse, as a state wielding enormous influence over the shape, texture, and color of the cannabis industry, from the Bay Area to Boston to Berlin and beyond. California has some of the biggest farms in the country. They produce probably more pre-rolls than anybody in the world. In fact, there's an agreement between a California company and a publicly traded Canadian company where I think it's $5 million a month in pre-rolls. And so you're going to kind of see California leading the charge. What we saw in 2016 were trends, and California would start that trend even when it wasn't legal. It would lead, the trend would start in California and leave. A year later, it would go to Denver. and whatever strain or whatever edible was popular, it would be picked up in Denver, and then about 6 months later it would hit Washington. So we got the trends about a year and a half after they were started in California. So it'll be interesting to see with the legality in California how those trends push forward. Banking in California is trending. Apparently it was so popular they're going to have to cap the number of companies that are able to have banking options. There's a small credit union in Sonoma County. It's hitting the pause on processing applications for cannabis companies because it's trying to deal with the backlog of so many cannabis businesses clamoring for financial services. So since the word spread in the marijuana industry that North Bay Credit Union has been working with cannabis companies in the past year, they've been inundated with hundreds of inquiries and simply can't keep up with the process, and they have limited staff. So they recently began issuing letters of applications explaining that the process has been suspended in order to catch up with current backlog. So they have approximately 70 applications currently waiting in the pipeline, and the letter urges recipients to please check with us again in a few months, but it's not clear if they may resume processing those financial service requests for marijuana companies or not. But it also likely won't be granting financial services to every company that requests them. According to the letter, the credit union's policy is to work only with cannabis companies that operate in Sonoma County and have had a business license for at least 1 year. Hopefully this will create some FOMO, then there'll be a fear of missing out by other banks, and they'll come in and they'll just start lending. So better that one company is out there and putting their neck on the line, and that it'll draw in more business, and more banks and credit unions will jump on board and offer some financial product. And with that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge, and I'm out.